All right, so let's talk about something that I know is on a lot of your minds. You want to start investing, you see everyone else doing it, you hear about the stock market, mutual funds, all that good stuff. But then you look at your bank account and you're thinking, man, I've only got like 500 rupees to spare right now. Is that even worth it? Want to start investing, but only have 500 rupees? Don't worry. Today I'll show you exactly how to get started with just a small amount, step by step. Let's jump in. The truth is, and this is something a lot of people miss, starting with a small amount like 500 rupees is not only possible, it's actually a really smart way to begin. It's less about making millions overnight, spoiler alert, that's not how it works, and more about building the habit, understanding the process, and getting your foot in the door without taking massive risks. We're going to break down exactly how you can take that 500 rupees and put it to work for you. No complicated jargon, just straightforward steps. Think about it. That first 500 rupees is your entry ticket. It's the key to unlocking a whole new world of financial growth. And the best part? Once you learn how to do it with 500 rupees, scaling up later when you have more to invest becomes so much easier. So, if you've been putting off investing because you thought you needed a huge pile of cash, this video is for you. We're going to demystify the whole thing. So the first question we got to tackle is, why even bother with 500 rupees? I get it. You might be thinking, sweetie, come on, 500 rupees. What's that really going to achieve in the grand scheme of things? Am I going to retire early on that? And the direct answer to that last part is, well, probably not from a single 500 rupees investment alone. But that's missing the entire point, and it's a crucial one. Starting with a small amount like 500 rupees is less about the initial sum, and far more about building the foundational habit of investing. It's about teaching yourself that, yes, you can set money aside, and yes, you can put it into something that has the potential to grow. It's a psychological win, a small step that proves to yourself that investing isn't some exclusive club for the ultra-rich. Here's the other thing. When you're starting with just 500 rupees, the stakes are incredibly low. This is your learning phase. You get to understand how brokerage platforms work, how to place an order, what it feels like to see your investment go up or down, and trust me, it will do both, all without risking a significant chunk of your savings. Think of it as a very inexpensive education in the world of investing. If you make a mistake, and beginners often do, the financial hit is minimal. You learn a valuable lesson with 500 rupees instead of, say, 50,000. This low-pressure environment is perfect for getting comfortable with the process, understanding your own emotional reactions to market fluctuations, and figuring out what kind of investor you want to be, all before you start committing larger sums of money. And finally, let's talk about consistency, because this is where that 500 rupees really starts to shine, not as a one-off, but as the beginning of a pattern. The act of investing that first 500 rupees can be the catalyst for setting up regular, consistent investments. Maybe next month it's another 500 rupees, and the month after that too. This consistency is the secret sauce. It's far more powerful to invest 500 rupees regularly every month than to wait years trying to save up a big enough amount to start. That small, consistent effort, compounded over time, is what truly builds wealth. So that initial 500 rupees isn't just 500 rupees. It's the first step on a much longer and potentially very rewarding journey. It's about laying that first brick. Alright, so you're convinced that 500 rupees is a great starting point. Fantastic. Now the next logical question is, where do you actually do this investing stuff? Gone are the days when you needed to call up a fancy broker in a suit and tie. Today, it's all about apps. And thankfully, there are some really good, beginner-friendly options available right here in India that make the process super straightforward. We're talking about platforms like Grau, Zerodha, with their Kite app, or Upstocks. These guys have pretty much revolutionized how everyday people can access the financial markets. And the best part is, they're designed to be easy to use, even if you're a complete newbie. Now, when you're looking at these platforms, especially as a beginner, with a smaller amount like 500 rupees, there are a few key things you want to keep an eye out for. First, user interface. Is the app easy to navigate? Does it make sense to you? You don't want something that feels like you need an engineering degree to operate. Second, and this is a big one, look at the fees. For long-term investing, especially with small amounts, you want to find platforms that offer zero or very low brokerage fees for delivery-based equity investments, or for investing in mutual funds. Many of these modern platforms are incredibly competitive on pricing, which is great news for us because it means more of our money goes into the actual investment rather than paying commissions. Getting started on these platforms is usually a pretty simple process. You'll typically need to complete a KYC, Know Your Customer process, which involves providing your PAN card, Aadhaar card, and bank account details. I know paperwork sounds boring, but these apps have streamlined it so much that it's mostly online and relatively quick. Once your account is set up and your bank account is linked, you can transfer your 500 rupees into your brokerage account, and you're ready to make your first investment. Don't get too bogged down trying to pick the absolute perfect app. The ones I mentioned are all solid choices. Pick one that feels intuitive to you and just get started. The key is to take action. Chapter 3. What to actually buy with your RS500. Don't gamble. Okay, so your account is set up, your RS500 is in, and now comes the exciting part. Deciding what to actually invest in. Now with RS500, you might be tempted to try and find that one hot stock that's going to shoot to the moon. I'm going to strongly advise against that, especially when you're just starting out. Picking individual stocks is tricky. It requires a lot of research, and even then it's risky. If you put all your RS500 into one company and that company doesn't do well, your investment could take a big hit. That's what we call putting all your eggs in one basket. And it's generally not a great strategy for beginners or for small amounts. So, what's a smarter approach with RS500? For most beginners, the answer lies in diversification. And the easiest way to achieve that with a small sum is through mutual funds or exchange-traded funds, also known as ETFs. Think of these as a basket that already holds many different stocks or other assets. So when you invest in a single mutual fund or ETF unit, your RS500 is automatically spread across all the investments within that fund. This significantly reduces your risk, because if one or two companies in the basket don't perform well, the others can help balance it out. It's a much more sensible way to get exposure to the market without having to become a stock-picking expert overnight. Specifically, for that initial RS500, you could look at things like an index fund or an index ETF. These are funds that try to replicate the performance of a major market index, like the Nifty 50 or the Sensex. So, by investing in a Nifty 50 ETF, for example, you're essentially getting a tiny piece of the top 50 companies in India. It's broad, it's diversified, and it's a very common starting point. Most of the apps we talked about make it really easy to find and invest in these. You'll be buying units of a mutual fund or a few shares of an ETF. The goal here isn't to find a hidden gem, it's to get broad market exposure and start your investing journey on a solid, diversified footing. Chapter 4. Making your RS500 work. The magic of consistency. Sip it. Alright, making that first RS500 investment is a huge step. Seriously, pat yourself on the back. But here's where we take it from a one-time action to a wealth-building habit consistency. Investing RS500 once is good. Investing RS500 or whatever amount you're comfortable with, every single month is where the real magic starts to happen. This is where a concept called a systematic investment plan or SIP comes into play, and it's an absolute game changer for small investors. A SIP is basically an instruction you give to your brokerage or mutual fund company to automatically invest a fixed amount of money at regular intervals, usually monthly. Now, why is a SIP so powerful, especially when you're starting out? Well, first off, it automates the process. You set it up once, and the money gets invested every month without you having to think about it or manually do it. This builds incredible discipline. Second, it helps with something called rupee cost averaging. This sounds a bit technical, but it's simple. When the market is down, your fixed RS500 buys more units of your chosen fund. When the market is up, it buys fewer units. Over time, this can average out your purchase price and potentially reduce the impact of trying to time the market, which, let's be honest, is nearly impossible for most of us to do successfully. So the goal here is to try and make that Rs 500 investment a recurring theme. Even if it's just Rs 500 a month, that's Rs 6,000 a year that you're putting to work for your future. And thanks to the power of compounding, where your returns start earning their own returns, even these small regular amounts can add up significantly over the long term. Don't underestimate the impact of consistent, disciplined investing, even if the individual amounts seem small at first. Think of it like building a snowman. Each small snowball you add makes the whole thing bigger and bigger. Start with that Rs 500 CE and watch it grow. Chapter 5. Don't stop at Rs 500. Keep learning and growing your wealth. So, you've started with Rs 500, you've picked a platform, chosen a diversified investment like an ETF or a mutual fund, and maybe you've even set up a monthly SIP. That is absolutely fantastic. But your journey doesn't stop there. Investing isn't a set it and completely forget it kind of deal, especially when you're building your knowledge and your portfolio. The next crucial step is to commit to continuous learning. The financial world is dynamic, and the more you understand, the more confident and effective you'll become as an investor. This doesn't mean you need to become a Wall Street analyst, but staying informed is key. What does this learning look like? Well, for starters, make it a habit to follow trusted financial news sources. Understand what's happening in the broader economy, both in India and globally, as these things can impact your investments. Start to familiarize yourself with basic financial concepts. What is risk? What is return? How does inflation affect your savings? What is asset allocation? And why might it be important as your portfolio grows? There are tons of great resources out there. Articles, videos, like the ones here on this channel, wink wink, podcasts and books that can help you build your financial literacy at your own pace. The goal is to gradually become more comfortable with the language and concepts of investing. And as your knowledge grows, and hopefully as your income grows too, you can start to think about gradually increasing your investment amounts. That Rs 500 SIP was the starting line, not the finish line. Maybe in 6 months or a year you can bump it up to Rs 1000 a month, then Rs 2000, and so on. The key is that you started, you built the habit, and now you're layering knowledge and increased contributions on top of that solid foundation. This journey of learning and consistently investing is what will truly help you grow your portfolio wisely and work towards your long-term financial goals. That initial Rs 500 is just the beginning of what can be an incredibly empowering path to financial well-being. Chapter 6. Your Rs 500 journey starts now. You got this. So there you have it, a complete step-by-step guide on how to start investing with just Rs 500. We've covered why starting small is actually a brilliant move, how to pick a beginner-friendly platform like Grau, Zeroda or Upstocks, what kind of investments like mutual funds or ETFs make sense for that initial amount, the incredible power of setting up a monthly SIP for consistency, and finally, the importance of never stopping learning and growing your financial knowledge. It's not as complicated or as out of reach as you might have thought, right? The main takeaway I want you to have from this is that Rs 500 is more than enough to get you in the game. It's about taking that first step, building that crucial habit, and demystifying the world of investing for yourself. Don't let the idea that you need a fortune to start investing hold you back any longer. You now have the roadmap, you have the tools, and you know it's possible. The power to start building your financial future is literally in your hands, probably on the same device you're watching this on. If you found this helpful and you're ready to take that Rs 500 and put it to work, do me a favor and smash that like button. It really helps the channel out. And of course, make sure you subscribe and hit that notification bell for more easy finance tips and straightforward guides just like this one. Got questions about anything we covered today? Or maybe you have a suggestion for a future video? Drop them in the comments below. I read as many as I can and love hearing from you. Thanks for watching, and I'll see you in the next video.